Hi everyone, welcome to today's video. So on today's video, I am going to invest 50 lakh rupees on a swing trading opportunity. This according to me is the simplest way of swing trading. That's A. Second, it is very easy to understand. Third, I will not complicate things by talking too much about technical indicators, this, that. Anyone can take this swing trade. Very, very easy to do. I will break it down for you in very easy to understand language. Yes, pause the video, hit the like button and we will get started. So point number one is that what exactly is swing trading? Let me give you very quick theory around it. So swing trading, there is no standard definition. Everyone comes up with their own definition of swing trading. My definition of swing trading is that when there is a very clear entry point and exit point. Let us understand that through an example. So let's imagine that ITC is trading at 250 rupees right now. You are not buying it because it's trading really high. Then it falls to 200 rupees. You buy it because you assume that at one point it will go to 250. That is what technical indicators are telling you. So you buy it at 200 with the expectation that it will go to 250 one day and you are going to sell it off at 250. So there is a very clear entry point, which is 200, and exit point, which is 250. So that is what a swing trading opportunity means. Now this swing trade can be taken in cryptos also. It can be taken in individual stocks also. It can be taken in entire indices like Nifty or Sensex also. It can be taken on US stocks also. So that is an entire very quick summary of what swing trading is. Now comes the second point that, okay, I don't know enough about technical parameters. So how should I start my swing trading journey? So perfect. This second point will make a lot of sense for you. So there are two specific things that you need to keep in mind. First is that you can take swing trading opportunities in individual assets. For example, previously I was explaining you about ITC. So if you are going stock-wise swing trading opportunities, that's risky. Why? Because your swing trade might fail, especially when you don't know technical indicators, and you might unnecessarily end up incurring losses. So the simple advice that I will have for you in terms of swing trading individual stocks is that please start by doing swing trading on really simple, easy to understand, good businesses. Don't go and experiment with random businesses where the profits are not there, the revenues are not growing, it's highly beaten down. Because if you get stuck with such trades, you might end up making a lot of loss. But still, I get a lot of queries that Akshat, that I'm doing a swing trade on Yes Bank. Should I be doing it? Should I not be doing it? Then my usual answer is that don't do it first and foremost. Why? Because it is not a good asset to begin with. But you still say that no, I want to do it. Just tell me what is it that I need to keep in mind. Then okay, at least put some stop loss. So stop loss means that let's assume that you are trying to purchase that ITC stock at 200 rupees and with the expectation that it will go up to 250 rupees. Then stop loss would mean that ITC, if it goes to 180 rupees, you will sell it off. I'm just using ITC as a reference point. Please don't do that. Please don't take that as an investment advice. So I hope this basic concept around individual swing trading is clear. Usually don't do it. If you're doing it, do it with good assets. Even if you don't want to keep that in mind, at least put some stop loss. Now comes the second option, which is investing in indices. In India, you have two types of major index. One is called as Nifty 50 and the other is called as Sensex. And here you can take a look at Nifty 50 index. So Nifty 50 index is a collection of top 50 stocks in India, and a briefcase is created of these top 50 stocks. All these top 50 stocks are put into it, and that represents Nifty 50 index. So that is what Nifty 50 index in practical terms means. So essentially, I would highly encourage you to swing trade on Nifty 50 index in case you are starting your swing trading journey, and this is precisely what I'm going to demonstrate. So now comes the third point that, okay, fine, we will not swing trade on individual stocks. We will swing trade on Nifty 50 or an index. That why is it that you have decided to swing trade on Nifty 50 right now? So let me present a very quick explanation there. So essentially, you will see these lines. This is called as a resistance line. This is support 1. This is support 2, right? So how do I identify resistance support line? It is the point at which all these things touch, go back, or they touch here and they bounce up. They touch here, they bounce up. So this becomes like a support line, and where it touches and comes back, that becomes like a resistance line, right? So I hope this point is clear. So if you take a look at Nifty right now, the Nifty is trading somewhere here. Now, how much away is it from the top right now? So roughly it is 6% away from its top. So this becomes your swing trading target that you could consider entering Nifty 50 in this range, and you can sell it off once it hits the resistance line. And how much gain will you make every time? You are going to make 6% gain. Why am I picking Nifty 50? Because it is safe to do it right now. The markets are still very extremely volatile. The bottoms have not been formed on individual stocks. So since I have some money, I thought that, okay, why not just go and invest it in something relatively safe and take a swing trade on it. And I am trying to deliberately pick an asset which is relatively safe to begin with, which is Nifty 50. Therefore, I am doing it. Now you might have an additional question that, Akshat, why did you not purchase it somewhere here, right? Why are you purchasing it here? It has given another 5-6% run up here. So your total profit would have been 5-6% here plus 5-6% here, and you would have made a lot of money. Correct? I agree. But there are a few points to remember. So first and foremost, there was a lot of volatility in the market in the last 1.5 2 months. It has been extremely volatile due to Russia-Ukraine crisis. So no one could have guessed the bottom per se. Even now, it's not as if the bottom has been built. But what is happening is that this part is a very strong support, right? So if I extend this line, you will see how many times Nifty has touched this line and has bounced back. So this is a very strong support. The Nifty touched this point and it has been constantly going up since then. So my hypothesis, and I could be wrong, is this, at least from a Nifty point of view, a temporary bottom has been made. So therefore I feel confident in terms of doing a lump sum investment, and therefore I am taking this swing trade on Nifty. I am still playing it safe because rather than picking individual stocks right now, I am going to Nifty and investing my money. Also, a very quick related point is that majority of the shocks in the economy has been absorbed. For example, Fed hike issue has been completely absorbed into the economy. Russia-Ukraine crisis has been factored into the economy to a very large extent. Supply chain disruption, China new variant coming up, and coronavirus peaking again, that has also been factored. So I don't see any other major problem cropping up. And if you check the FII data, FII buying data, they are entering back into the market. So therefore, I feel that this is a good time to take this swing trade. So we have understood three very basic points. What is swing trading? What is the difference between swing trading the Nifty versus individual stocks? And why is it now that I'm swing trading Nifty? So hope these 3 points are clear. Let's move on to point number 4 as to where I'm going to demonstrate how exactly am I going to swing trade. Now, essentially, if you're going and trying to buy Nifty 50, you will see a lot of company names. Here you will see SBI Nifty Index Fund. Now, what will happen is that you will see exit load as 0.2% and expense ratio as 0.18%. Now, I'm trying to minimize both these percentages, especially the exit load. Why? Because if the swing trade, for example, assume that Nifty tomorrow goes up and rises by 6%, then my swing target has been met. So I should be selling my index fund portfolio at that point in time, but I'm unable to do it. But if I purchase something like SBI Nifty Index Fund and if I'm paying 0.2% exit load, then I'm unnecessarily paying a lot of commission. Exit load in very simple terms means the amount of money that you need to pay if you are exiting the fund before a stipulated period of time. And since I'm trying to swing the entire Nifty, I need to have that flexibility of not paying the exit load. So I'm deliberately looking for options where this exit load is really less. So I will discard funds like this, right? And additionally, if the expense ratio is good, then nothing like it. So for the purpose of swing trading, I have picked 3 specific index funds that are meeting this criteria. My favorite is Navi, and this is not a sponsored video. There is no way I would be investing like 25 lakhs of my own money just through sponsorship. It just doesn't make any sense. Since there are 3 companies in the mix, why would a company allow me to put money in other 2, right? So that doesn't make sense. And I will tell you why also I have picked it. Why? Because exit load is 0%. This is extremely important for me. And expense ratio is the least, which is 0.06%. This had the best statistics. Therefore, I have decided to put almost 50% of my swing trade money in Navi. Now, your obvious question would be that, okay, why did you not put 100% of your money in Navi? Because I'm a diversified investor. I would always split my payments into different buckets and then put it. Therefore, I have picked 2 more funds. My next best in line was ICICI Prudential Sensex Index Fund. I have put 15 lakhs here. Exit load again is 0%. That is what I was looking for. And expense ratio is slightly higher. Therefore, I ended up putting 15 lakhs instead of more money in it. So this was the second best fund that I was able to figure out. Now comes the third and final, which is DSP, which is again a very big company. So I have put a bit of money in this also. Then again, you can see that the exit load here is 0. That was the criteria I was looking for. And expense ratio is 0.22%. So these are the 3 specific funds that I have picked in order to execute this swing trade. And here is me making that live investment. Okay, so this brings us to the final section of the video where I will answer some of the basic FAQs. Number 1, when am I going to exit this particular trade? When the Nifty hits 18,300, I will exit these entire mutual funds. That is point number 1. Point number 2 is, what will you do if Nifty falls further? So I will downward average it. My hypothesis is this. And again, taking you back to my screen, that it will fall again to maybe this level. So I will continue to invest in this range. If it doesn't fall, if it goes up, then I'm anyways making 6% money. If it falls further, I will downward average it. The risk reward equation makes a lot of sense for me because it is very likely that in another 5-6 months, if I'm making 6% return, that is very good for me. That is not a problem at all. It's roughly 13.5, 14% return in a very risk-free type of an asset. So I'm happy doing it. Not an issue. This is a safer investment for me. So therefore, if it falls further, I'll buy it more. I will wait for it to cut its previous peak. And guess what? Nifty always cuts its previous peak. It will again happen. And whenever it happens, maybe it will take 6 months, maybe it will take 1 year, maybe it will take 2 years. So 2 years I'll not make any money. That is also fine. But Nifty always dances around. It's not as if that, it will get stuck. Even when I say that the markets are sideways, the sideways movement happens in a range. So I'm just waiting for the range to hit its stop. So whenever it hits its stop, I'm going to sell it off and make money in the process. Third and finally, the question would come that, okay, once you have made your money, then what will you do with it? At that point in time, if I get the confidence that there is a breakout of Nifty that is happening, that it is going to break this channel and go up, at that point in time, I will redeploy this money, whatever money I'm making from it, into individual stocks the way I always do. Right now, I'm not seeing massive investment opportunities, at least in bulk. So therefore, I'm taking this swing trade, which is a very reasonable risk reward equation for me. I hope you enjoyed the video. Press the like button and I will see you tomorrow.